Well,
Can you
Joe, it's
understand it?
interesting. I looked at a bunch of the names he was long today, and pre-crash, these guys were trading 75, 80, 100 vol, 120 vol names. So in a lot of ways, it was like he took Bitcoin and leveraged it 5 to 6 times. I mean, that's the definition of insanity. Like you can have a lot of leverage when you're trading, the euro currency or dollar yen, which trade at 7 to 8 vol. But when you're trading something that's already 70, 80, 90 vol, putting any leverage on it seems insane.
A guy that has this, I mean, you would have to call it skill and courage and a lot of things to run that, whatever it was, run whatever it was up to $15 billion from 200 million, something like that. That takes skill, but do you think it was a perfect storm that brought him down? I mean, you had the Chinese internet situation, which started hitting those. You had the Viacom stock sale. You had some things sort of converge all at once that kind of threw him for a loop. But so was he great on the way up if he can't anticipate that things can go wrong and just absolutely decimate you?
For the life of me, I just don't understand how you could have that much leverage on such a volatile portfolio. Remember what I was saying? I was looking at volatility before the unwind, right? These were 70, 80, 100 vol stocks before the unwind. And so it just makes zero sense in any risk manager's perspective. Now, listen, when you have a hedge fund, there's usually a risk manager. There's investors that are all over you, writing monthly reports. They're looking at leverage. They're doing due diligence. And so for hedge funds, there's a lot more eyes on you than in a family office situation. And so got lazy, hubris, grandiosity. It gets very heady when you're making that much money. And I don't know Bill well, and everyone says he was a lovely guy. But it just makes little sense.
All right. So is this something we need to be concerned about that needs a closer look by, I don't know who, or the total return swaps? Do we need to start looking at those?
I think the total return swap thing
family businesses, because that's not, I can't imagine a long-term capital management from a family business, but Credit Suisse feels like they got stuck in with long-term capital management.
They certainly do. They certainly do. I think the swap thing might get looked at, right? It does. It's in essence another way of hiding transparency, from both regulators, from companies, from the market. And so that it won't surprise me if regulators say, hey, maybe we should change the rules around this. I think also, listen, new entrants to the prime brokerage market, they just couldn't help themselves. And so I think you see the old grizzled guys who have been doing this a long time probably suffered far less losses because their systems were better. They had dynamic margining. They've been through the process before, know how to cut quick. And I think the newer players probably in this prime brokerage business, burnt their hands a little more. I don't think there's anything systemic here, right?
Well,
most people
good.
were short these names. What's crazy is after these crashes, most of the names are only back to where they were January 1st.
Shepard Smith here. Thanks for watching CNBC on YouTube.